Something else that stood out to me from the report is that midlife and older traders are the most bullish, 49% of them. It's not a big difference, but it's 41% for younger traders and 38% for retirees. That's sort of the gap between midlife and older traders and younger traders. Like, one would think it would be the other way around, right?
Well, that's an interesting dichotomy, right? Because younger traders have more time, to invest and to build that retirement portfolio. But think about some of the headwinds that some of them face, right? They've seen inflation uptick, and I think that's front and center when we ask our traders what's the most important thing that they're using in determining making their investment decisions. It is inflation. And so when you're polling a younger trader who might not be able to at this point own a home or own a car, and they're looking at that cost of living adjustment and their ability to pay for those high ticket items is decreasing, I think that's an issue. The other thing I would say is, with student loans coming around here in October for repayment, September and October for repayment, I think that's another thing that maybe skewed a little bit negatively for the younger traders. Where I think when you look at kind of the midlife traders, a lot of them have kind of experienced within the last 20 years some of the ups and downs in the markets. They're a little bit more prepared to kind of ride things out. Because even going back to what we saw last year, that the 20% pullback in the S&P 500, we've recaptured a lot of that this year. Now, time will tell whether or not the pullback that we've seen in August is short-lived or whether it continues. But I think there's just a little bit more resiliency built up with some of the midterm or midlife traders.
Something that I found interesting within the survey results here, Joe, as well, asset class level. Many traders bullish on value stocks, domestic stocks, growth stocks, equities in general. And if we were to add on another asset class to this, regardless of how you want to classify it, there had been so much fanfare around cryptocurrency and where that has kind of sputtered in its own sentiment now. I mean, we're looking at a vastly different picture between this year and last year.
Sure. No, I think it speaks a lot to kind of the risk aversion that we saw at the first half of the year and how that's kind of made its way into the second half. While we have noted that our traders are a little bit more bullish, they're bullish within certain asset classes. As you mentioned, it tends to skew towards the equity side. And they're becoming a little bit more bearish on fixed income. And I think part of that has to do with just that rapid ascent of interest rates that we've seen. I think another important takeaway is to remember that this poll was conducted between beginning of July and the beginning of August. And let's remember what happened with the equity markets at that time, right? S&P 500 was up about 3% in July. NASDAQ was up about 4%. And then from a kind of a macro level, we had Q2 GDP come in more favorably. And at the same time, we had some inflation data that came in a little bit less than expected. So it set up a little bit of kind of a Goldilocks in July. And that kind of skewed towards a preference toward equities.